25% of small businesses fail within their first year. Almost half fail within 5. But there are things you can do to reduce your risk of becoming a statistic. And there are things you cannot do that will all but guarantee a short trip to the business graveyard. If you're just starting a new side hustle or you're growing a small business, here are 4 money moves you can make right now with big payoffs. Number 1, keep track. As soon as you make your first dollar, even if it's for a small engagement shoot or somebody hired you to smoke 20 pounds of pork barbecue for a baby shower, start keeping records of all your business income and business-related expenses. If someone slips you a 20 because you helped them shovel their driveway, that's one thing. But because you're watching this video, I'm going to assume that you're interested in building a lucrative business, whether it's just something on the side or you want it to be your main thing. And legally speaking, as soon as you make $400 in self-employment income, you are going to need to report that to the IRS. And if you've just been throwing all your gig cash into the same big pot as your personal finances, it's going to be really tricky to get everything sorted out come tax time. Worse yet, if you haven't been doing a good job tracking your finances and you haven't been setting aside money for taxes, there's a good chance you're going to end up owing the government some money, and you might not have cash on hand to pay the bill. So get prepared. There's lots of different tools available to help with this. I'll link to some below, but you can start super easy by just tracking income and business-related expenses in a very simple spreadsheet. And this will lay the groundwork for some more advanced financial reporting that we'll talk about in a few minutes, like right around here. So, number 2, keep things separate. Hand in hand with tracking your business finances, you actually want to keep them separate from your personal finances. Open a business bank account. Deposit all of your business income into it and pay all of your business expenses out of it. Use a business debit card or apply for a business credit card. Do not pay for personal expenses with your business card. Do not pay for business expenses with your personal card. Keep them separate. Not only does this make things much easier from an accounting standpoint, it can also protect you from possible legal trouble down the road. If and when you decide to organize your business as an LLC, one of the main benefits of doing that is to protect yourself. So heaven forbid somebody wants to sue you, they could only get to your business. They couldn't get through this thing called the corporate veil and take any of your personal assets. But if you are commingling all of your monies and treating your personal finances the same as your business finances, then the court isn't going to treat your assets as separate things either, and people could potentially take your personal assets, and you're putting your house, your car, your cash, everything that you own personally at risk. So keep them separate! So as I said earlier, start tracking things immediately, and then once you get your second or third paycheck and you see, okay, this is going to be a thing, I don't think it's too early to open a business bank account. Quick note, business banks will probably require that you have an EIN or employer identification number. It's super easy and free to get directly from the IRS. You can watch a video walkthrough on how to do that right here, and I'll include a couple bank recommendations you can check out in the description. Number 3, set goals. If you ask my friend, financial educator Nina Israel, she'll probably say this is the first thing you should do.
We need to know where we're going. First thing, when you get into the car, you have an idea of where you're going. So why wouldn't you have that idea with your business? First thing.
But I don't think she'll be upset with me for telling you to take care of those 2 foundational things first. After all, it's kind of easy to just fall into a side hustle sometimes without really meaning to and without having a grand vision for where you want to take this new business venture. But you shouldn't fall through your entire life. You should know where you're going. And that includes knowing what sort of money you want to make from the work you do, and then figuring out how you're gonna go make it. Honestly, this is something I wish someone told me when I first started freelancing. Originally, it was just a side project here or there. I wasn't supporting myself on it. It was just a little extra cash in my pocket, so I'll take what I get. Also, I didn't like pricing myself. I didn't have a ton of experience at the beginning, so I didn't have a lot of confidence, and I had zero comfort level with selling myself and asking people for money. And when it was all said and done, some of those early projects probably ended up costing me more in time and stress and troubleshooting than I made from it. You can chalk it all up as experience building, but you can't stay in work for beans mode for too long. And if I'm being honest, I was probably stuck in work for beans mode for the first 5 years at least of side gigging. And I excused it because I didn't need it, but I wanted it, but I didn't believe that I could have it. So I didn't even bother to put in the work to figure out what was really possible. Listen to me. It's okay to want something good for yourself. And just like if you were shopping for any big ticket item, you price it out. If you're in the market for a car, you decide what you need, what's absolutely essential, what would be a nice to have. You figure out what you can afford, and then how are you going to go about saving up or financing your purchase? And then you do it. Go life shopping. Price it out. What sort of income do you need to comfortably provide for yourself and your family? Now, reverse engineer your goal, and based on how much time you're willing and able to invest, set your pricing. And then move on to number 4. Build a financial process. Understand your money. What do you need it to do? What is it actually doing? And what is it going to do in the future? I had a great conversation with my friend Nina, who I mentioned earlier. She walked through her recipe for a holistic financial process. I'm going to blitz through it real quick here, but be sure to watch the full interview. She unpacks all of these components in more detail. We already talked about the first piece of the puzzle, goals. You're not going to know how close or far away from where you need to be if you don't know where you're trying to go in the first place. The next ingredient is the flour in the cake, cash. You're not going to bake anything without it, so you need to manage it well. And one example of a cash management framework that I love is the profit first method. It's a simple process you can run right inside your bank account where you divvy up your income into different buckets for profit, taxes, owner's pay, and operating expenses. I talk a lot about profit first on this channel, and I have a detailed overview you can watch. I'll drop that in the description. So let's move on to number 4, financial reports. Boo! Okay, this is where things start to seem like it's boring, but it's really, really helpful, and you shouldn't ignore it. There are 3 standard financial reports that you should at least be aware of and understand how to read, but you can pay somebody else to actually write them for you when your business grows to the point where that's warranted. The first is a profit and loss statement. That just says how much money your business made or how much it lost. A balance sheet is a report on where your money is. What are your assets and where are your liabilities? And then finally, a cash flow statement tells you where your money is coming from and where it is going. You've already started some basic financial reporting when you began tracking your income and expenses on a spreadsheet. You've been tracking, right? And when you're just starting out, a simple spreadsheet can go a long way in giving you the information you need to know where you're at and help you make decisions for the future. But there's other things that you want to track and measure in addition to your money, key performance indicators, or as I like to call them, pre-money. KPIs are the 4th ingredient of our financial process. Exactly what you should be measuring will vary from business to business, but an example of some very common KPIs would include leads and conversions of one form or another. Say you're a hardscaping company, and you know that for every 3 estimates you send to a prospective customer, you get 1 signed contract. And for every 4 online inquiries you receive, 1 of them results in a scheduled property visit and estimate. And for every 30 visits to your special discount patio offer landing page, 1 of them results in an online inquiry. So if you're measuring everything, you can track back up this funnel and infer you need 360 web page visits in order to sell 1 patio project, or something like that. I have no idea what hardscaping conversion rates look like, but you should know what your conversion rates look like so you know what levers to pull, what you need to focus on growing and optimizing. And then you can start budgeting and forecasting, our 5th and final piece of our financial process puzzle. So now you know where you're at, where you want to get to. You're looking at your cash flow statements and you see that you have an expense coming up later in the month, but Your sales have been trending down, so how are you going to make up the difference? You understand your KPIs, so maybe you can invest some money in Facebook ads in order to boost your website traffic. But maybe you don't have the full amount you need in your marketing budget, so you pair that with some cost-cutting initiatives. You don't have to fly blind. You have the data and the know-how to make informed decisions. So stop slipping through life and just winging your business. Get a firm grasp on your numbers so you don't get added to the numbers of failed businesses.
Let me tell you something. Those business owners who are just kind of looking at their numbers, getting them ready for tax time, in 5 years, 1 out of 4 of them will still be in business. The other 3, no. But the business owners who have developed a way to look at their numbers weekly, and I'm not saying hours and hours each week, and I'm not saying 1,000 numbers every week, but the way the business owners who have found a way to keep a pulse on their business and look at those numbers weekly, over 95% of those business owners will still be in business 5 years from now.
Money isn't everything, and that's why we cover a wide variety of topics on this channel. If you have a question or an idea for a future video, drop a comment below and be sure to like this video, subscribe, and share this with a friend, because I'm on a mission to help as many business heroes as I can turn their side gig into their central gig and grow a strong, purposeful, profitable business that supports them and their family. So I'd really appreciate it if you help spread the word and get people connected to the resources they need. I hope this was helpful. Thank you for watching. I'll see you in the next one.